Good morning, ladies and gentlemen. Today is the 7th of June, and we were expecting the market to gap up slightly, which is more or less what happened, and been pretty flat around 14,700 until now. The time currently is 10:15, and I've taken a very early exit for the day because option prices, first of all, are extremely low, and I mean the potential reward isn't that great, and I do not expect them to fall off further considering that it's a Monday. Now, of course, I could be wrong and there could be perhaps another 4 to 5 points on the table, but I'm just not finding the trade very attractive because today is a Monday and Monday is not a kind of day where you'll see a lot of depreciation in OTM options. Right. So that being the case, I also made some adjustments to one of my positional trades. I've covered that in this video. Thank you so much for watching. I hope you have a good trading day today, and I will catch you tomorrow. Take care.
Want to meet like minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. The time is 9:14 and market is just about to open. Pre-market is showing green across the bat except for Bajaj Twins. On Friday, we closed with very good positive sentiment, globally speaking. And today, looking like a positive day. I think at one point on Friday, um, SGX Nifty was showing futures at 15,800. So, quite a positive sentiment. And more or less, my plan for today is to wait for the open and then probably wait for 15-20 minutes, um, because we've just been moving up and up and up, and put options don't have any value. And invariably, there might be some kind of profit booking that comes. So, if the gap gets sold into, I'll use that opportunity to enter. What my plan is more or less is to enter above the maximum put side open interest, so 15,500 being maximum put side open interest. And Friday's potential double bottom at 15,600. This will be what I will consider from the put side, and from the call side below 16,000. So 16,950 or 16,900. We'll keep you posted. Time is 9:15 and the market has just opened. The time is 9:25. I've just entered the position. What we've seen is steady selling in Bank Nifty, Reliance, as well as IT, everything steady selling after the open. But naturally, that is some amount of people who had long positions booking their positions, and that is now starting to normalize. The idea is we'll more or less hold plus minus 15,700, which is why I have an equidistant strangle from 15,700, and more or less what I will be doing here is holding this range unless there is a very clear break towards yesterday's low, or if we start seeing an upside break with some amount of momentum. The time is 9:56. I was trailing a stop loss of about 2 points, which is now hitting, which is why I'm taking the exit. Also, the prices aren't a level of attractive wherein I will sit through a position for the entire day, especially considering it's a Monday. So at one point, because of the weakness shown in Bank Nifty, I moved down my call. Now a lot of big green candles are forming in Bank Nifty. I don't particularly intend on sticking around for too long. More or less, trailing stop loss hit. I wasn't expecting anything more than 7-8 points for the day, due to the early spike in calls that gave me a bit of an advantage, wherein I was up 5 points, and then I decided to trail by two. And yeah, that's more or less the end of the trade. I'll wait and see through the day if there's some momentum type trades that I can take. With current option pricing, I might be able to buy options into momentum, but we'll have to wait and see for that. Okay, so what I'm going to be doing now is rolling over, and I'm going to explain what exactly a rollover is. If you see, I have Larsen shares of about 1,100, and I initially had sold a cover for those at 30 rupees at 1,500. Now Larsen has had a very clear breakout and is on a upward trajectory. I sold some put options to get a little bit back, and that has managed to give us 9 points on the 1500 put, and it has given us about 10 points on the 1400 put. So yeah, overall effectively between the two we can say we've collected about 20 points, and this is losing us exactly 50 points. We're in a 30-point loss. In case you weren't able to follow that, just listen to that again as to how we went over it. Now this is bleeding and we don't have anything. Of course our shares are benefiting equally, but we are now giving up the opportunity risk on the upside. So I don't want to stay in this position anymore. But now if I book a loss on this call and then the shares go down in value, then I would have booked a loss in my F&O position and my shares would have also lost value. So I'm in a lose-lose situation. Now what are my options available? One great option available is, look at it this way. I am losing 50 points on this. I'm losing 50 points on this and I no longer want to lose 50 points on this. So what I can do is 50 and then minus the what I've gained from the put side. So I'm losing effectively on the trade 30 points. Now 30 points is what I need to collect so that my shares retain profit and effectively I would have booked no loss. Anything over 30 points is actually a profit on the trade also and on the shares also. So my option is to square this off, right? Square off this position and then manage to collect effectively 30 points from the next month. Now I can do that by rolling up. I can use the July 1600 call wherein whatever this 30 points loss I'm booking plus an additional 15 points is what I will be getting from selling the July 1600 call. I hope that was clear in explanation. All right, so that's more or less the plan now. So I will be squaring this off. One other option I have is to break, for example, let's say it's strongly bullish. You expect the momentum to keep going for a very, very long time and you don't even have the shares. In this case, I have the shares. So this is the approach I'm taking where I'm rolling forward, rolling up and keeping it all on the call side. Since I have two lots here, one other option is I can square this off, roll forward in such a way that I collect 30 rupees from the call side as well as from the put side. So I'm converting two sold calls into one sold put and one sold call. But I won't be doing that right now because I have the shares. So I have no upside risk. So I don't mind just rolling forward the calls in the format of the calls. Now, for now, I will, since I am going to be rolling forward the calls to the next month, I'm going to retain the puts where they are unless they seem to be threatened, in which case I will actually be making a profit because my call will have a lot more value than what my sold put options have. Okay, so have bought back the 1500 call and sold the 1600 call of the next month. I am booking effectively on this trade alone. I'm booking a 50-point loss but collecting 44.4 points from the next month but at a higher strike. So I have more space to work with. This is what is called a roll forward. Of course, from the overall trade, since I've benefited 20 points from the put options, my effective loss on this trade at this point is about 30 points. And I'll keep these put options open because actually, let us take a look at, okay, because I've kept the put options open because my maximum profit actually will come at a lower side and a down move will not hurt me too much. That's why my put options are still open because there's still some credit in them. I can uh, wait for that to decay since they're open. And yeah, a down move will not hurt me. It'll give me enough reaction time because one idea will be you have put option side risk. Now, yes, that is there, but it will be manageable since it'll actually be a delta negative trade. If you didn't get that, like, just go back because it's a very simple concept and you'll be able to figure it out very easily. Now, why did I roll forward the Larsen and didn't roll forward with for example, with Reliance? I made a short straddle out of it. I took more credit, and even though the Reliance position is bleeding, I'm still holding on to that. One, because I have no upside risk, which is because I covered the share by 200%, and the other is because Reliance will have resistance near its all-time highs, right? And also, it's at the money. My sold call, which I had sold as a cover, which went from 28 to 70 at one point, and now it's 57, is actually at the money. Whereas in the case of Larsen, my call had gone deep in the money. Also, from an intraday perspective, I think that's about it for the day. I don't find the premiums very attractive. The market is pricing in hardly for the entire week, about 160, 170 points of up and downside movement. And whatever IV spike had to be taken advantage of in the morning, I've already done that. In case there's some kind of big short covering move that propels us higher, then I'll be looking at a trade like selling the 15,000 call option, waiting for the call side IV to cool off. But apart from that, not going to be taking any trades as such. Yeah, thank you so much for watching. Have a great day. Very early exit today, barely 10 o'clock, but it's a Monday. And for now, I want to keep my risk very, very, very low. Um, we'll keep you posted. Thank you so much for watching. Take care.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.